especially in GBPUSD. We had a significant decline yesterday. I'm going to talk more about that later today, or in the next minute or so. I'm also going to talk a bit about what's going on in stock markets, which are really sort of the, I think, best performing markets right now. All right, let's begin with the euro, though. So euro is moved back to support, and if you wanted to, you could buy here at this little buy area. Why? Because price bounced here last time in 9th of July. The market moved upwards, and the idea was just to buy down here around 112 and sort of look to target 113, which is up here. We went as high as 112.80 and then spent about 5 days up here. That will be calendar day, not necessarily trading days. And now price is moving down lower. Now, I don't necessarily fancy too much this little setup. You have what looks like a funny looking head and shoulders with a head, left, right shoulder, and then you have that neckline here, which does suggest that if we trade below 111.81, we can't trade lower. Now, the problem though, when the market is consolidating within a big range like this one here, is just that you can't really trust these levels. The price could potentially, you could be long, then you get stopped out, and then some people get the signal to go short, and then they short, and then the price goes back up again. So it could easily be a situation here where, both long and short positions could be losing money, and that's why I don't really like this. Now this is the GBP, much more easier to understand, and you can just load the weekly chart, and we can hide everything. So, it's not a surprise that the UK is dealing with Brexit, and was some comments by Boris Johnson yesterday, which is probably going to be the next Prime Minister of the UK, that maybe, well, I don't actually remember exactly now. And actually, let's check out my Twitter. So Sky News reported that Boris Johnson is considering a plan to suspend Parliament at the time of the Brexit deal expiration. So what this means is that if they suspend the Parliament around that time, that means they can't vote. So, and as I understand it, Article 50 and just the exit would be triggered at that point, and then that would be the end of it. A hard Brexit, right? So with that, it's not unfamiliar or not that difficult to understand what the pound is going down. So you have that, despite the consumer price index out today and the unemployment figures out, labor market figures out yesterday. The market is worried, and it should be worried. So when you have that sort of change in the economy, if you have a free floating currency like the pound, then the idea is that the pound is going to take the hit instead of everybody being in the country being forced to cut salaries, as for example they had to do in Greece and Italy and places like that, and in Spain, because they only have one currency. This takes a big hit. I know this for a fact. Well, it's not a secret, it's basic economics. But I was born in Sweden, and in Sweden they have their Swedish kroner, and it acts like a buffer all the time. That's why they can maintain their living standard without huge problems, unless you want to go abroad, or in the case of the UK, because they import so much food from other parts of the world, it actually becomes a bit more expensive. But in Sweden, it's not that issue, and they're a big exporting country, Sweden as well. So every time the kroner declines, you can buy yourself some Volvo trucks, SQF ball bearings, and like Ericsson stuff, not the phone, but the satellites, the tanks, and the warplanes and all of that suddenly gets cheaper because they have that big export sector. And it's the same thing here. The pound is buffering the potential decline in economic activity in the UK due to Brexit. Now, the idea here as well, in general, when I'm speaking with people that have been around the market for longer than me, is they think the pound is going to decline, and then we have Brexit Day, and you have a big decline, like the referendum, and then after that, the pound would bottom out. Because the idea would be that then every fear is out, the currency already adjusted, and after that, with some good deals, trade deals, the UK economy would be able to rebalance itself. And yeah, that would not surprise me, you know, because there's something called buy the rumor, sell the fact. Or like in this case, sell the fact. And you do the opposite, right? Because we're selling the pound now ahead of the event. And when the event happens, maybe we have a bit of weakness, but then after that, it should be being priced in. So that's what we're seeing right now. Now, technically here, there's several patterns that are interesting. You have this massive failed head and shoulders. You get yourself a left shoulder, right shoulder, head. And then this was the right shoulder. We traded below the right shoulder. So the difference from here to here is the same distance from here to here. And that suggests we can go down lower. Then you have just the simple fact that we traded below the December low. And whatever is a pattern or not, we cannot deny that the price was oscillating. So trading around 129-ish. So when the market is moving far away from 129 to 133, people would sell back into the middle. And when we go too low, around 124.74, people would buy back and push it back into the middle. But now we're leaving that behind. So usually that range, you'll get that. And that will sort of suggest we can decline by the same magnitude. Now, my analysis here with the failed head and shoulders gives you an inferior target because the range is the same, but it's inferior target because we're measuring from here. If I put it down here and treat this like a double bottom rectangle, then 116.51 should be the target, which again would not be very unsurprising. I showed you this before, and I'm sorry for getting stuck here in the pound today. But if you zoom out, isn't this just on the monthly? Isn't this just a massive head and shoulders with a big head and 2007 at $2.08 per pound? And then you guys have a massive left and a massive right shoulder, and then this was the break to the neckline. If that's the case, well, look at that. Your target is at 169.45, which again, that may be a bit too strong, but uncertainty, people hate that. It's what it is. In our case here, as for today, there's several game plans here. People that are very, very bearish. I know some people that are hedging flows and stuff like that. They're just being short and they're selling a bit more on the break here already yesterday. They have stop loss orders up here around 128. But if you're more like me, you just want to try to grab some piece of the action, not everything, then the trend defining level will be up here at the high. So that is 125.82. And if we put some fibs on this now, if we put the fibs on the whole thing, then fib from the very high to the current low gives you these different levels. You have the low here as well. You have the December low at 124.79. So around, I would say, first fib 124.57, 124.60 or so. That would be the ideal entry for a bearish position. That will give us a relatively good risk-reward ratio. So if we short here, stop on the other side, and then let me see, because I moved this around. If we would in one go just go down to the pattern target, then you're looking at a risk-reward ratio 4.25. If we don't go all the way down in one go, which but makes perfect sense, we just reach one like 121. Then you're looking at 2.88 initial risk-reward ratio. So I like this. Let's see what happens if it bottoms out, goes up a bit, goes down. This is the salsa. Dollar yen continuing to trading sideways. There's not a lot of activity here, unfortunately. And the market is, took out support. If it takes out support, it can resume its downtrend. If it takes out this 109 level, it may continue this little short-term bullish bias it has. It also is a bit of a funny looking inverse head and shoulders, so the break here could be the second attempt. Remember, I already drawn this line like that, and that did not work out. But we might have a recompletion and an actual push, which is pretty much what we've seen here in GBPUSD. Because you might remember, I said already a few days ago, like in the beginning of the month, I said the break here would push down lower. But it failed the first attack. The second attack seems to be working fine. As for gold prices, unfortunately, they're under a bit of pressure. There's not too much to do here. I think the way this looks like it may bottom out here, but I have a feeling it can go down to the 90 level or 1394 or something like that. From here, potentially bottom out and go upwards. It's just within that triangle, as you can see here. And it will continue to consolidate. And then I think the more likely scenario is that we have a break to the upside at one point. And that's why I'm watching this level here. I also did a special video about this on the YouTube of ATFX. So let me send you that. It's down here. So it's in the chat now. You can check that out. And yeah, let's move along here. Crude oil prices, very sharp decline yesterday. Was some comments. Apparently was talk about. Well, you can check this out from oilprice.com. Oil plunges as Iran conflict cools. So apparently, U.S. Secretary of State Mike Pompeo struck a softer tone on Iran. So, apparently looking to start some sort of negotiations. I'll send you the link. You can check it out afterwards. It definitely caused this to move down lower. So, what about this today then? So this today, unfortunately, did trade below this trend defining level. Now, obviously, if you're watching the market, you don't necessarily buy at the first attempt. When you see the price cutting straight through into the buy zone, like this, I saw it yesterday. It was moving down lower. My first reaction was not, let's look to buy. My first reaction was, let's wait maybe half an hour, 20 minutes and see what happens. And that can reveal many times, because you can see you had bearish candle, and then down here, you have your first bullish candle. Sometimes on the 30-minute here, for example, you have your first bullish candle, and that could potentially be used as a sign that now the market has stopped declining. So it's not always a good idea to just buy directly as the market gets hit by a comment like that. Now, when you look at this today, this is a 6-hour chart. This was just a very tight level here. But looking at these levels specifically here, I must say, unfortunately, that the trend remains bullish, and it's just that I made a miscalculation here on how good this was going to be of a pattern, really, or as a support. So I'm going to remain bullish like that, looking for this to head upwards from current levels over the next few days. On the other hand, trade below support, then we can probably go lower. Now, is this like a very good trade idea? I'm not really sure. Out of the markets we looked at today, what do I like the most so far? GBPUSD. I wouldn't mind giving that a try. All right, so this is the S&P 500. And as you know, we talked about, we provided you with several buy ideas here over the last few weeks and months. And I want to continue with that. I continue to insist that if you're not already long, 2,994 is the key level. We might never reach that level, but it looks like we will reach it, and I'm pretty much neutral. We have as well, this is the German DAX. So already in the beginning of July, I said down here, people are going to be buying. So far, it looks like they are buying, and we have reduced the trend defining level. It was down here somewhere. It's now been reduced to this level here. So the loss has been reduced significantly, because you had yesterday you had your first, no, 2 days ago you had your first bullish day, and continuation here. So it does look like we have resumed that little bullish uptrend. If we haven't, well, the stop loss if we haven't, the stop loss has been reduced significantly, and we're looking at a very good potential return here, right? If it works out good, we hit the high, it's going to be good. If we don't hit the high, we'll be stopped out for a very relatively small loss. We have this level up here, which is based on this head and shoulders pattern that we talked about and also showed you how to trade in April. You might remember in April, we said that we have a massive head and shoulders. We've gone through like that, and that gives you actually the actual target would be slightly higher even. But let's be realistic here. You have the yearly high here, and then you have this high here, for instance, from July 2018. And that, guys, is the main presentation here at investingcube.com and ATFX. Let's see, we have a few questions. We're going to see if we can answer that as well. Don't forget here to like the video. So we have 13 people watching right now, just 2 likes. So make sure you sign in and just like it. Let's see here, we have a question as well. Sir, please tell about GBP Swiss franc. I'm in a huge loss in that pair. Let's take a look at it. I can provide you with my view on it, but I can't really tell you what, if you should be buying or selling. But I can tell you my view, and then you can make up your own mind. Now, I think you probably bought. That's what most retail traders would have done here. In normal life, buying something that is cheap is a good idea, like a discount, right? Your favorite pair of jeans, your favorite brand has a 30% discount, and you go out and buy them, you know. Or your favorite pair of jeans, they have doubled, or your favorite phone is like very, very expensive. You buy less of it. So what happens is that the guys who sell the clothes or the phone, whatever they want to buy, they lower the prices, and you find some sort of equilibrium. The problem with financial markets is that many times they don't work like that. Then when they go lower, they go lower and lower and lower and lower, and when they go upwards, they go higher and higher and higher. To give you an idea, no, it's not the same thing, but luxury handbags. Quite interesting actually, because I have a luxury handbag in this little. I have a luxury handbag with me actually. It's my wife's handbag. She forgot it in the buggy on the way to nursery. Now that handbag is relatively expensive, but just the fact that it is expensive makes women want to have it more. The same guy, the same way as, you know, you have this Rolex here, you know, you want it because it shows that, well, I don't know what it shows, but the more expensive it is, the more people want to have it. And it's a little bit the same here today. So right now it's declining and everybody piles in. So what I try to do is I try to go and pile in with it. Now, we just talked about the situation with the UK and the British pound. I don't think that's going to be resolved immediately, and I think you can probably have more weakness in GBP versus the Swiss franc, at least in the long run. In the short run, the market might bounce up a bit, and but as long as we trade below something like 124.16, this is probably going to be a bearish trend. So even though it's oversold, maybe you think it's excessive, and you know, we just look at the chart and it is, I guess, a bit excessive. But if we trade, for example, to give you an idea, if we trade below 122.10, which is this level down here, if we take out the support level, the next levels are down here. I'm not saying I'm going to go there in one go, or that's going to be very, very easy. And it's definitely oversold from this perspective. I think if we trade above 122.06, the market may actually go up eventually, okay? But to be really confident about that, we need to take out 124.16, which is this level up here. And I think in the short term, we can put some fibs on this like everything else, and we can sort of just make an assessment how much higher this is gonna go right now. And maybe we'll go up to 123.20 or something like that. And if you have a situation where maybe Boris Johnson comes out and says, you know what, Sky News told us yesterday, that's not true, that's undemocratic, I would never do that, then maybe you'll have a bit of a squeeze and be trading up at again, maybe 123.50. maybe 123.90. But to be a buyer here, you need to take out 124.16. That's what I would say. Now, let's address a little bit about the situation with having a huge loss. Now, because the markets do like this, they go down like crazy, or sometimes they go up like crazy, we need to adjust our position size for the market volatility. So if it's a market like this one, when it really wants to go down, it goes down. And like in this case, it goes down quite a lot. It's been down with about 8.74% in about 106 days. Actually, it's less. It's 55 days, 77 days, or 55 trading days. Then you need to adjust your risk here. So you can't buy the same size here as you would buy in maybe something like Euro GBP. So Euro GBP has moved a bit as well, but not as much. Let me see, actually. Maybe I'm wrong. Well, it's still less, 6.66. But in the past, you can see it's sort of been stuck in a 356 pip range. So you need to adjust your position size. And I know it's not very fun always, but I like to maximum risk per position on my end is 1.5% of my account. Okay, 1.5% of my account. So that means that if you take 100, divide that by 1.5, that means I have 66 chances to get it right. If I lose 20 of these, well, that's 30% of my account. So you can understand, even 1.5% of my account max loss is still quite volatile. If you tell someone, okay, 20 losses, you'll be down 30%, they would not be that interested to invest with you, right? But if you tell them, well, in my worst year, I've been down, 10%, and in my best year, I was up with 25 or 30, then things become more interesting. So you need to make sure you don't risk too much per trade. Now, we're going to wrap things up. It's 10 o'clock already. If you are interested, by the way, in more educational stuff like this one, I do offer a premium educational course via ATFX. So what happens is that course is about 3.5 hours long, 3 hours and 45 minutes. And in there, you get 2 complete trading strategies, plus talk about the money management aspects. I show you a bit of numbers and tables to make you better understand how important it is to make sure you have money management on your side. And it's very straightforward. Just to access that, you just need to actually have a real account with ATFX. ATFX itself is an FCA regulated broker. They're one of the bigger brokers in mainland China, and they have offices across the world, and obviously if you're European, you can open up via the FCA regulated entity. In fact, you must open via that one. But if you're offshore somewhere else, then we have offshore accounts as well, where we can provide you higher leverage but less security. So we have all of that. I just sent you a phone number to my WhatsApp. You can just ping me there and just let me know if you're interested. It's a free course. Minimum deposit into account is $500, and that gets you the course. And the idea, of course, they give you it for free because ATFX hopes that in the long run, you're gonna trade a bit with them, and that's how it becomes a win-win. You get the education, you hopefully become a profitable trader, or at least stop losing money, and at the same time, when you trade with ATFX, they make money on the spreads. So we have Marvin here saying good morning. We have Mr. Mansour as well saying good morning. Good morning to you guys. And the question is, do you think cable's in the bottom or not? And is it time to buy GBP pairs? I think, I think in the run up now, so by the end of the month, if not already before that, we should have confirmed that Boris Johnson is the Prime Minister of the UK. And then by October 31st, that's Halloween. So Boris Johnson and also Jeremy Hunt, but in particular Boris Johnson, has made it really, really clear that, um, no deal, having a deal or no deal, by the time October 31st happens, we're going to have some sort of a exit. Personally, maybe I think he's bluffing. I think he might come back and say, look, we're going to have another few months more to negotiate. I think at least. But if he doesn't, we're going to have a hard Brexit. And I think in the run up to that, GBPUSD is going to be under pressure. The pound is going to be under pressure. Unless, of course, there's some commitment from both the EU and the UK side that they're looking to make some sort of a deal. Question here: I want a Rolex. Yeah, why not? Alex, what will all this affect on the economy if the pound continues to fall? So I think the number one effect, I mean, there are different ways we're seeing already now in the case of the pound, right? Food inflation is high, so what we call core inflation is relatively high. I mean, that's at least what I noticed personally. But if we have a hard Brexit, and because the banking sector in general is not really doing too good. So we already seen here in London how the very high end of the housing market has lost about 20% of its market value, and I think potentially, if more and more people leave the city, I think Deutsche Bank was supposed to, get rid of thousands of people, and a large part of them here in London, and there's a lot of people actually just leaving London. I think that can influence things like the housing markets in a bad way if you own the flat, which of course most people do. Not everyone, of course. And then you have other issues as well, parts of the agriculture that are getting subsidies right now that would not necessarily get that. And as you probably know, we have like companies like the car makers of the UK that are struggling, and then we have the airplane manufacturers and where's Rolls-Royce that do airplane motors. So from those sort of things, we are very reliant on Europe. It's going to be a bit of a struggle. I think what would happen, more inflation in general, and then we'll see. There's other sectors as well, because it's going to be some work, as you know, is not really it's being handled by people from Europe, which are happy to accept lower wages, like picking fruits and stuff like that, doing your coffee in the morning at Starbucks, things like that. It's going to be more inflation on stuff like that as well, because the new threshold is that you need to be making 30,000, which is the same threshold as they have for non-Europeans. So imagine now suddenly your barista is going to be making 30,000. It's going to be inflation across the whole spectrum. So we'll see what happens. Good and bad. Hopefully Boris Johnson and the rest of the government can strike some good deals. Another thing as well, which I think is going to happen, is that they're going to reduce taxes even more. Boris Johnson says that they want to push up the higher limits threshold for taxes. So if you're already making money, and you're making money, for example, internationally, so you operate a lot with your clients, are not necessarily UK based, but they're a mix of UK and foreigners, then you get, it doesn't really matter, because you're being paid in euros or pounds, or sorry, in dollars. And then now you're gonna have less taxes potentially, so you pay less tax for that. The problem is, though, the people that are not making too much money already, they are gonna we'll see, they're gonna be having less competitions from low skilled people from overseas, so maybe it can work out good for them as well. Unfortunately, though, if you just look through our history as humans for the last few hundred years, uh, the little man rarely wins, unfortunately. So I think, again, we'll see what happens. But it can be. I think it definitely is going to be a good time if you're running your own business. You're making a lot of money already because you pay less taxes. Corporate tax is probably going to go lower. Deregulation, so it's going to be easier to set up a business. And again, if you have money for good lawyers and stuff like that, then it's really good. If you don't, then I think it can be a bit of a struggle. But let's hope I'm wrong, and let's hope they can struck some very nice deals and things get going. Okay, guys, enough politics today. It's very, very difficult to say exactly what's going to happen, but the charts don't lie, and rich or poor, people are selling the pound right now. Things going down, and I think, again, if it goes up a bit, I'm probably gonna give it a bit of a try to sell here, see if it goes down. That's always good for me because I can hedge a bit of my flow as well. And then that's it really. We'll see what happens. If trade above 128, 125.82, we'll probably go upwards. What else? Yeah, you have that WhatsApp. So if you want to if you're already trading, right, it's not that difficult to change broker, right? It's very easy. And I spent from 2006 in 2019. That's for how long I've been trading. And the first few years, I didn't make any money because I didn't really know what I was doing. I had to read up, I had to study. I spent a lot of hours. And since 2009, so that's like 10 whole years, I'm working full-time in this industry, which means that I've been looking at all these charts every day for like 10 years. And what's interesting here is that if you don't want to waste time trying to figure things out, then that educational course can be something for you. If you don't mind spending a few years, maybe spending a lot of money, unfortunately, then continue to do what you're doing. But if you want to cut down the time it's going to take you to learn, then that educational course could be something for you. I'm available via phone here, so if you have questions, just ping me and I'll put you in touch with the right team. Have a good day, guys. Don't forget to like the video, and I'll see you guys tomorrow, same time here at investingcube.com and ATFX YouTube channel. Thank you, and bye-bye.